What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 6th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's Macro Monday, we got a lot to dive into, from analyzing Bitcoin's price as it started to fade here over the past couple of days, and on top of that as well, talking about the S&P 500, the broader stock indices, and why the markets are separating from reality with what we're seeing in currency and bond markets that give us all the cue that we are getting very close to the end of this relief rally. We've got a lot of things to dive into today's video. If you guys like the video, consider dropping a like and stay tuned later on for a sponsored review of our long-term partner here on the channel, Radix DLT, where we're going to be diving into a lot of the exciting developments around the developer community. All right, let's go ahead and dive into the video, guys. As I mentioned, if you like the video, drop a like. Let's go ahead and kick off the rambling. So the first thing I want to talk about here is Bitcoin. I want to analyze price, take a look at market order flow. And while a lot of people are definitely getting a bit worrisome about the price action here over the last couple of days, I don't think it's the final leg up here for Bitcoin. While we are convinced that this is a relief rally and that we'll start to roll over, and maybe this is a range where if you were to just simply do a normal short, or for example, say a 2x short, I think this is the range where it could start to make sense to make some of those trades. But again, I'm someone who leans into the camp of not trying to make an action before I see a clear trend reversal. I think very well, as we've seen in the past, we tend to find that price will deviate above those indicators that convinces everyone that the bull market is in, that the trend has officially reversed, and it's time to trade with the trend, i.e., in this case, it would mean price getting above the 200-week moving averages, somewhere around $25,500 to $26,000 for a near 68-69% relief rally, no pun intended. But then again, this is where markets are likely eyeing for price to come up here somewhere above those weekly moving averages and then eventually fail to hold on that 200-week, rallying back down, or slowly correcting back down into the pocket between the 200-week and 200-day, trying to make the 200-day support after a pullback and failing yet again with price rolling back down. I think that's the likely probable scenario. So don't be surprised if we get a little bump up here over the next coming days. But what we are starting to see is a clear sign that this rally does not have the weight to hold up long term. What do I mean by that? Let's go ahead and take a look at our partner tool Bookmap here and take a look at Multibook, which is taking a look across the board some of the most liquid exchanges in the cryptocurrency space. And as we analyze the CVD, or the cumulative volume delta, i.e. market order flow, it's letting us know if there's more buyers or sellers taking the next best available price in the market. Where is the demand to get in or out of a trade, essentially? And right now we are seeing that the vast majority of the cumulative volume delta over the past 7 days has been in negative territory. We had a slight bump up here back on February 2nd, but every time we're getting these kind of bump ups where some confidence comes into price, it's days upon days of fading out those gains in market order flow, taking us back down into negative territory. And the futures as well for Binance, which is again one of the other big liquid indexes we track, is signaling the exact same thing. So right now we're again starting to see that after weeks upon weeks of having constant positive cumulative volume delta, right now, when we're getting up towards this upper range, there's a lot of resistance. There's a lot of people taking advantage of that market order flow, and that has exhausted a lot of the buy-side pressure that can start to push up price due to the fact that there's a lot more asks on the order book that are filling that market order flow and resisting price from moving higher. This is, again, a big reason why, for those of you out there who have not yet used the tool, if you guys are using TradingView out there, while I definitely love TradingView for TA, Bookmap is one of the best tools here and one of the more exclusive tools out there that'll give you that access to understand market order flow structure, be able to understand where the bid and ask resistance is due to the heat map, and all kinds of other really cool tools like liquidation tool trackers and all types of different means to be able to determine how the market is really carrying out price action, what is really leading price into the direction it's going, and what kind of signs can we get for where price is going next. So I highly recommend you guys check them out in the link down below in the description. But I digress here. The big thing I really want to focus on is that right now we're starting to see sense back in the later half of January. A lot of that momentum is starting to fade, and we are not seeing follow through just yet. Now, the big thing I want to talk about here is analyzing the broader macro perspective, because not only am I a bit concerned about how Bitcoin isn't keeping up with the broader equity markets, as the Nasdaq, for the example, the other day had a 3% gap up off of Facebook's earnings and a lot of other major corporate earnings for Amazon, but on top of that, The big thing I want to emphasize is, yet again, like we focused on crypto, about how relief rallies can go to absurd lengths and convince a lot of people that this is it, this is the trend reversal, this is the bottom, we are now kicking off a new bull market. I want to go ahead and talk about a really important dynamic here that I don't think many people have considered. And that's a question of who is really buying this rally. I think that's a very important question to ask because it tends to be that only institutional volume, real institutional buyers or sellers in this case, are what are going to determine the trend to the upside or the downside. I don't really care so much what retail volume is doing. I care about what institutions are doing. And if I find a divergence between what retail traders are doing versus institutions, that's where I know where the upcoming opportunity is at play, where eventually there will be a trend reversal, trapping retail liquidity. And that's exactly what I think is playing out here. Whether we've found the top now at around 20% or even have a ways to go here, testing towards the previous relative highs in August or other similar levels, such as the 12,600 point range here, which was previous support back in February through April, which was cleared through and yet again deviated for a short period of time, meaning down to new lows back during the August relief rally. This is the kind of stuff that I always ask myself. Who is driving this rally at the end of the day? That's the key question we need to ask ourselves. And as we've talked about before on the channel, we've seen the names that are leading this rally, names like Carvana and Peloton and RKK, essentially the names that are driven by retail buyers. Now, again, if we take a look across the board on price action, there are a lot of these levels that we're looking to get retested that are yet again going to trap the same type of traders who got caught in the trade back in April, back in August, and got caught with a major pie in the face, a major move down that left them taking even more losses, giving up some of those major returns they've made over the last decade during the secular bull run. And how do we know exactly? Why do we talk with such a high degree of confidence that a lot of this buy-side pressure is coming from retail traders? Well, one of the big things that is a key sign that we are repeating history here is taking a look at the major insider trader ratio spike that we saw over the past couple of weeks as we went through the month of January. Now, insider trading essentially is measuring if insiders, and these are people who are, large stakeholders, either they're on the board of directors of companies, they own 10% or more share in the company. Essentially, it's a way to track if those individuals are buying or selling, because those insiders have some of the best information to the future outlook of the company, the internal operations, and what's really great is that in the United States, we make this public knowledge, that essentially those large shareholders and what they're doing, it's a right for you to know that as a shareholder. Now, many of you might be wondering, Nick, what does this have to do with me as a Bitcoin investor? Well, if the movements in price and what insiders are doing in regards to equity markets are signaling certain trends, we should definitely be taking note because that is going to have a major weight on crypto markets and the either risk on or risk off mentality of the bigger investors that have the mass to be able to push price in either direction. So what are they doing? Well, this spike here, they got up to a 40-point range here in the month of January, the biggest we've seen over the past few years, has signaled that there is a lot of insider selling. Essentially, all of this retail buy-side pressure into a lot of these junk companies, into a lot of the technology plays that while they may have cash-rich fundamentals, are still trading at high PEs and still have forward outlooks that are much more optimistic than what likely is going to play out. These are the names that are getting bought up. These are the names that are gapping up. And essentially, since that period of time, there have been huge amounts of insider selling. A major spike here at the end of January. So I would again tell people to heed with caution here. When we get these big spikes, it is likely institutions taking advantage of that retail optimism. The idea that the Fed has pivoted. And I'm not saying here at all, and I want to make it very clear that there aren't some institutional traders or some large traders that are also getting suckered by the rally. Trust me, guys, I have seen retail traders who are just as smart, if not way smarter, than some institutional traders. So I'm not here to kind of badger people on regards to how much your portfolio size is. My key point here is this, that the retail crowd generally trades with emotion because a lot of them don't have the experience of managing a large-scale portfolio and therefore having to apply proper risk management. Simply put, this is what absorbs a lot of that inflationary liquidity in the economy, and what we've been talking about the Fed liquidity trap that we wrote about in this month's newsletter and the Dash Report, but we've also talked about here on the channel to some degree. If you guys are interested in that, I highly recommend you guys check out the newsletter. You guys will also be able to see what plays we're looking to short down the line. But if anything, if you guys need any sign of confidence, the inflationary hedges, the Dow Jones, right, the large enterprise companies that can hedge inflation tailwinds, they are even starting to stagnate here and hit a consistent range of resistance that's been held down since back in December, making in lower relative highs. That is your telltale sign that things are about to get worse. But one big thing that I want to talk about here to kind of wrap up the conversation of corporate earnings and talk about some of the big charts we're watching is a really interesting article that came out this morning from CNBC. A really nice quote I saw that came out from Carl Kalupa, who's the CEO of Gamma Investment Consulting. And he was quoting the fact that in this case, earnings could be really the tailwind that really starts to knock down a lot of these companies and the valuations that a lot of them are trading at. Right now, a lot of the market is estimating that we are in a new bull market, that the price to earnings ratio or the PE multiples that we're going to start paying for these companies are going to start going up again, that essentially we're going to have the soft landing fantasy that has been promoted time and time again, that because the labor market is strong, even though that's the case, even though there may be some inflation in the economy, we're on the way down, and the Fed's going to be able to, basically start tightening. They're going to start lowering rates. Inflation's just going to magically go down with that, and consumer demand isn't going to come back to outweigh supply. That's the fantasy that's going on right now. Well, essentially, he's talking here about the fact that at current valuations, the S&P 500, if we want to have a proper recession, if we want to get down to those recessionary valuations where there's capitulation, or we're trading under the book value of these companies, essentially, we would need to go down. A 25% decline from fair value measurements would take us down to the COVID low of 2,200 points on the S&P 500. Okay, now this is again the reality I want you guys to just be able to stomach at the end of the day. All right, if you are buying the rally right now, if you are confident that this is the start of a new bull market, all I'm asking is that you have proper risk management in place, because consider the fact that this may not be the next bull market, that this could yet again be a relief rally where we zigzag back down to new lows, and that this could be the beginning of a longer term downturn, which we have yet to even see play out, that we are just at the beginning phases of. And again, we've been talking about this level for a long period of time, that we would come down for a third time to essentially come down into the funnel and track back down towards this range in the S&P 500, closing out any leverage longs, any over leverage plays down into this range. No one essentially being safe in this downtrend. Valuations coming down into undervalued territory where real value investors who have cash on the sidelines will buy the dip and take advantage of the opportunity. Might seem a bit far-fetched. I'm not saying we need to go down to those lows exactly. All I'm saying is be prepared. Have your stops set. Have risk management as well as your understood reward profile in any given trade you're taking. All right? It's a key thing to focus on here, because again, as we've analyzed through previous bear markets, a lot of people thought they were buying the dip in 2007 and 2008. A lot of people thought they were buying the dip time and time again back in the 2000s. These bear markets can drag on for a long period of time, especially if you're buying into the technology plays. Again, it can take a long period of time for these plays to fully recover. Sometimes an entire decade or decade and a half, for 15 years. And don't think that Bitcoin can't get caught in the same trap. Now, I want to go ahead and talk about some important charts here, because while equity markets are living la la land, they're excited, and we are seeing a lot of the crazy, close to bankruptcy names making double-digit returns day by day. If we take a look at the Dixie, the dollar index popped up about 2.5 points here over the past few days, since back on February 2nd. US 30-year yield popping higher here. Hasn't come down to test those December relative lows ever since. We're setting in a higher double bottom here, setting a higher foundation. And while energy commodities like natural gas, whether we're taking a look at the natural gas CFDs or contracts for difference, whether we're taking a look at the Dutch TTF natural gas calendar, futures basically tracking the energy costs within Europe, and oil also coming down here towards that 200-week pocket. seeing whether or not we'll be able to make it support once again or deviate below the range just for a temporary period of time only to move higher here in the near term. The key thing is this. We are seeing mixed signals. We're not seeing all of the signs that point towards an absolute move to the downside for commodity prices and inflationary pressures, and therefore an upward move in equities. We are not seeing any clear trend just yet. We shouldn't be seeing a pop in the 30-year yield and the Dixie if we're going to see a Fed pivot. This is not what happens with a Fed pivot. This showcases that markets have overpriced the Fed's lowering and softening on monetary policy. And if we can't be ready for that, if we get trapped in the relief rally, it's going to come with the painful costs of potential losses in the market. The key point is this, guys. Remaining in cash right now is likely the best play. And if the absurdity gets to further lengths, we likely should start preparing to short by puts, if anything. We don't have to risk all of our capital, but we can take advantage of the relief rally and fade the move back to the downside. That has been the winning trade here. Not fighting against the Fed has been the winning trade time and time again. And if some people want to go out again, the same talking heads I've seen on CNBC, on all the major retail networks out there for retail traders who have said, oh, it's time to bet against the Fed. The Fed's lying. They're playing soft. They're playing dovish. You heard Jay Powell in the recent Fed meeting. No one's buying it. Well, so be it. We have benefited from staying in cash since we closed out of our positions back in August. And we got plenty of room here before we get back into a position where we may be underwater from being in cash, so to speak. Anyways, guys, I hope you guys enjoyed the core part of this video. If you did, drop a like, and let's go ahead and dive into this review of Radix. Alrighty, everyone. So in today's sponsored review, we're going to be diving into our favorite emerging layer 1 protocol within the crypto space that's also been one of our long-term partners here on the DataDash channel for over a year and a half, and it is no other than Radix DLT. Now, for those of you who haven't heard about Radix before, I'm going to give a quick primer as to what Radix is all about, but on top of that, mainly focus in on some exciting developments over the past month or so that have been focusing on the developer grants program and allowing people to have some incentives to get started with Scripto, the native programming language within Radix. We've got a lot of things to dive into today's video, so let's go ahead and kick things off. So the first thing I want to go ahead and talk about is what Radix is all about. I'll give you guys a quick 1-minute primer. Radix is essentially aiming to fix a lot of the big problems within the crypto space. We've come a long way over the last decade in crypto. However, there are a ton of user experience issues, both for users and developers when interacting within the crypto space, even on major networks like Ethereum. While Ethereum did a lot of great for the crypto space, there's a lot of big problems, from the long developer time it takes to actually build smart contracts, but even considering the fact that there's a long auditing process in order to account for all types of different security vulnerabilities and ways where smart contracts can be exploited. But on top of that as well, for users, a ton of ways where interacting with crypto is just so difficult. Essentially not knowing what transactions you're signing, and on top of that, having to deal with poor user experience when it comes to gas fees and other different types of setbacks. Essentially speaking, Radix is aiming to build a hyper-scalable network that can actually scale DeFi to competing or working in tandem with traditional finance, but on top of that as well, allow for applications to not only build in a much quicker fashion with higher degrees of security, but on top of that, being able to build applications that you just couldn't build in traditional frameworks like Solidity on networks like Ethereum or other EVM compatible chains. This is where Radix is really big. It has started from the ground up, asking developers what they needed and built a network that's made and bind for developers as well as users who are looking to use DeFi applications on a day-to-day basis. And now that Scripto, the native programming language for smart contracts, has been live over the past couple of months, we've been able to see some really exciting applications, or quote-unquote blueprints, that allow for really exciting potential within the Radix ecosystem. And these are different types of applications and categories that you're likely familiar with, such as decentralized exchanges through large players like CaviarSwap and OchiSwap, as well as other types of platforms in the lending space, futures, options, and derivatives, as well as NFTs, DAOs, and governance. all the kind of building blocks that are necessary to build a thriving DeFi ecosystem. And this is really just the beginning. Some projects are still working behind the scenes and have not released their open code to the market just yet, as people are trying to get the front runner advantage to building within the ecosystem. But on top of that as well, from the existing projects we've seen, it's showcased one clear thing, which is that it's much easier to build the traditional applications that existed within the crypto space, as well as build entirely new applications that just simply couldn't have existed in other layer ones or were so difficult to build, considering all of the potential vulnerabilities that could come with it, that it just didn't even make sense to build it on networks like Ethereum or other EVM compatible chains that utilize Solidity. So this is really big. And if you guys haven't seen it, back a couple months ago, the CTO, Russell Harvey, which we'll talk a little bit about later under the developer grants program, did a really exciting video where he showcased the Uniswap v2 code for the traditional Ethereum network versus what it would take to build the exact same kind of application within the Radix ecosystem. He was able to compress thousands upon thousands of lines of code into just under, I think, about 200 lines of code. So again, huge developer time saved here, lacks of concern around vulnerabilities, around potential hacks or loopholes where developers could break into the code and do some kind of malicious attack. Completely out of the question here with the way this crypto works, because the developer language is in plain English. And this is one of the key things that I want you all to understand, which is that I'm not just here to say that you should be a user of DeFi applications within the Radix ecosystem or even an XRD holder, which is the native token of the network, but more specifically, I want you guys to be open to the idea that you too can build really exciting applications within the Radix ecosystem. Using Scripto, you're able to build applications at a much faster pace than other traditional languages. And it's a language that a lot of people can start to pick up, even if you don't have traditional developer experience. It more relies on the fact of you being able to put in the time just to learn the basics around the language, and more specifically have creative concepts and ideas to build exciting blueprints that people can tap into and utilize for much broader applications within the Radix ecosystem in a hyper efficient way that allows you to do exciting things. So let's go ahead and talk about some of the things that are going to help you to potentially get started. If you guys haven't checked it out already, I highly recommend you check out the developers section of the Radix website, where they have documents as well as details on the grants program we're going to talk about today, as well as other ecosystem players and community resources. Radix is dedicated towards helping developers getting started. And one of the big ways they're doing this is through the launch of the Radix grants program, which just launched back here in January and February. So simply put, what the Radix grant program really is the hyper-focused and detailed program that's aimed at getting people a head start in developing exciting applications for those who are showing the most passion and more interesting ideas within the crypto ecosystem of Radix. So essentially speaking, the grants program offers not just monetary resources for developers, such as $30,000 US in XRD tokens to get started, but on top of that, bi-weekly one-on-one meetings with the Radix Work Mentor, as well as access to office hours, exclusive masterclasses, and practical guidance and user testing. So all kinds of different resources you're going to need in order to make an application successful. A fully tailored solution that actually interacts with you towards building something really exciting. And what I really like about this program is not only do they give a great amount of monetary resources to hopefully go part-time or full-time into really building these applications for those of you who are looking to make that transition to crypto, but on top of that as well, this gives you much more than monetary support. It gives you the team, the resources from some of the higher ups at Radix Works to be able to actually get the kind of leadership you might need in order to understand how to build applications from people who have actually built the network themselves. Great applications come from great engineers who are passionate about what they're building, not just because of monetary incentives. And this is going to allow for Radix not only through Scripto's ease of access and use when programming, but on top of that, through the grants program to attract the right kind of engineers that are going to build really exciting applications, bringing a great ROI for the Radix network, as well as the developers who participate in it. But outside of that as well, within the grants program, the first tranche has already launched here back in late January with some really high-level projects such as AlphaDex, Caviar Swap, Photon, Hermes Protocol, OchiSwap, and XRD domains, tapping into a lot of the key cornerstones that one would expect from a DeFi ecosystem, including decentralized exchanges, domains for user IDs within the Radix ecosystem, and so much more. So this is really exciting to see that Radix has already got such a wide range of different projects building within the ecosystem and getting that kind of support to actually flesh out the ecosystem and give it a solid foundation. But if you guys aren't really at that point where you want to tap into the grants program, if you feel like this is a multi-month journey towards getting into the next tranche, which will be in Q2 of 2023, then you should definitely consider at a minimum checking out the developer program incentives. So this is another thing that launched back here in late January that will allow you to get a nice solid reward of XRD for just simply getting a feeling of Scripto as a language and building a blueprint, building your first actual, basically your first project or code within the Radix ecosystem. And what's really great about this is that you can get up to $75 of XRD if you simply just post one of the blueprints. There's key steps here that will tell you how to actually get the rewards within this incentive program. But if you submit a really good example of an asset-oriented DeFi blueprint, the team may nominate to give you over 200 XRD for your participation. Now, there are some steps here again to follow, but again, I think this is really exciting to see the developer ecosystem getting a way to have near direct contact with a lot of the team at RDX Works, and to be able to build those early relationships, building exciting protocols, getting feedback, and hopefully being early to developing within these ecosystems. But last but not least, what I really love is that they even have Russell Harvey as well, who, as I mentioned, is the CTO of RDX Works and really active and participating within the Scripto ecosystem, for a chance to win over $1,500 of XRD, impressing the CTO. And what's really interesting about this is that you don't even have to submit your smart contract code. You just simply need to build something that you feel is exciting. And if the team thinks it's really exciting, or Russell more specifically, they will reach out to you with the reward and build a more engaging conversation with you. This is the real kind of stuff that gets me excited. Seeing the team actively communicating with engineers, taking in feedback on their user experience, and seeing whether or not those users are sticking around long-term and building exciting applications, trying to see whether or not they can maintain developer retention, which is very big in the long term to be a really exciting project as an L1, and having the sustainability to get to the scale of networks like Ethereum. So the key thing I want to emphasize as we're going through time is the roadmap. Day by day, Radix is getting closer and closer to its release of the fully fledged client for Babylon, which is going to allow for everyone within the Radix ecosystem to start participating with decentralized applications at a high degree of scale, and on top of that, allow for developers to finally put their ideas to the test in the open market. And this is going to be really exciting. For those of you who are interested to become a part of this, who want to be early to something really new within the crypto space, I highly recommend you guys check it out. Give some time out of your day to potentially trying out Scripto, checking out some of the really exciting documentation resources you can find within the developer ecosystem. Just simply head on over, check the docs, and you'll be able to get all kinds of resources on how to build some of your first actual blueprints within the Scripto ecosystem. We're still early within the space, as Pierce mentioned, within the RadFi event that was back a little over a month ago, but not for long. It's important to have some exposure here, whether it's using the applications, holding XRD, or participating within the developer ecosystem before it gets too viral here over the next coming months to the next year. Radix has been a long-term project building behind the scenes. They haven't been focused on flashy marketing nor chasing trends. They've been aiming at building a sustainable network long-term that addresses a lot of the problems that time and time again continue to hold back crypto, so we can hopefully realize the full potential of DeFi and other exciting trends in the long term. That's it for today's review, though. If you guys are interested, check out the links down below in the description. Let me know what your thoughts are down below in the comments about Radix, whether positive or negative. And until the next video, everyone, I'll see you all in the next one. Take care, everyone.